All right, and welcome back for the episode of Carnivore Trades. Today is Friday, June 2nd, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Also, don't forget, we are doing the flash sale till the 15th, 25% off cycles and carnivore course, or 30% off both. There's your promo codes right there if you're interested in that. Please come check it out, or send me an email, aaron@carnivoretrades.com. By the way, we have something special coming down the pipe here soon, so stay tuned for that early next week as well. But anyways, let's get here into the markets today. So Spider's another up day, up 1.5%. NASDAQ actually lagging here for the first time in a little bit of in a while. Reason for that, here's your reasoning, is that the banks are really kind of taking leadership here, and you're seeing the IWM get a bid. The reason for that is we talked about the KRE, obviously this little kind of zigzag pattern, and that seems to be playing out right. So I would say that can probably get up to 44, maybe 45, but there's pretty good resistance right up in this area here. So that zigzag little kind of bull flag there is playing out, but there's a lot of resistance up here on the weekly. And that's dragging, right now, that's dragging the IWM up. Why is this up today? Well, the debt deal is basically going to pass, got through the Senate. So I guess there's relief now from the banks, which, I mean, the markets, it's like this is what they're saying on TV, like, oh, the markets is seeing relief because of the debt deal, like as if we were selling off in the first place. It just, they need a story to push a narrative, right? So that's essentially what it is. My guess is they just turned the buy algos on and left for the Hamptons. But, is what it is. That's the story. The other part of the story is the jobs number. I believe it was 331,000, 330-something thousand jobs created. The market basically now saying, okay, the Fed's not going to pause, so good jobs data is good because it means we're not going to go into a recession, which, okay, well, I've got a few islands, a few bridges to sell you if you think that. Now the 210 has been inverted here, and there's our dollar index chart. The 210 has been inverted now for almost a year. So, I mean, 3-month and 10-year, that's been inverted since October, and that's deeply, deeply inverted. 5s, 30s, 10s, and 30s, you get the idea. To me, it's more so says that the environment that we're in is still tight labor market, and that inflation is sticky. So that's the way I look at it. The market's not looking at it right now that way, and obviously we have to respect it. This has gotten through all my targets here, and it's gotten through resistance. It's gotten through certain cycle dates that I've had. And what that tells me is they just jammed this full liquidity in March to save the banks. And that's probably the reason why we're rallying here. Now that the debt ceiling is done, I believe Biden is talking at 7 o'clock, so that should get inked. If not tonight, then this weekend. That's where the TGA refill comes in, and that's where liquidity gets sucked out. Now, I know everybody's going to say, well, everybody knows about it, so then it's going to be, we're just going to keep going up, right? To me, it looks like they're squeezing the shorts out ahead of that. Maybe we did know about it, and that's why we're getting squeezed out ahead of time. If everybody's buying protection, right, for this supposed volatility event, then why is the VIX at 2-3-year lows now? If we look at the weekly, we got to go all the way back to, well, guess when? February 2020. We're very close to that area of taking that low out. So that's 1368. Not that far away. So the VIX here is at an extreme. To me, it's just hedges flying off the handle. Volatility is getting unpinned a little bit, and we're going into an event where it's going to factually, liquidity is going to get sucked out of the market. This kind of needs to happen in order for there to be any sort of downside. I know that sounds counterintuitive, like, well, the VIX can't, if the VIX goes down, that's not going to bring downside. But you got to get those shorts out of the market here, and I think they're doing a pretty good job of that. Just straight up gamma squeezing pretty much every day. We talked about the Thursday, Friday effect. I wasn't sure if we'd have enough. I wasn't sure if this past Wednesday was enough of a pullback to kind of get that squeeze. Apparently it was. As you can see, we're just pushing up there. But now we are coming into some interesting levels, and we'll see if it starts to matter again. So if we look here, again, going back to the all-time high, there you are, right with your 618, and you're going into this little reversal from August, testing the August highs. By the way, this has been a point of control for a long time, right? So January bottom right around this 430 handle, and actually we can go back farther. So you can even go to right here in September, October of 2021. We had to consolidate in this area in July a little bit, came down, hit it right there. So I mean, we could even let's just draw it in. So basically kind of like right in this zone. Pretty good point of control. So we're coming into that level, and we're pretty overbought, especially on the shorter term time frames. Look at this hourly RSI. This is and you're diverging a little bit here too. But look at the NASDAQ, diverging there as well. So I mean, this just looks tired, and that's another reason why I think the Qs, although they did exceed the 618 a little bit, and it is up today, obviously making a new high, but intraday it's not making new highs. It hasn't made new highs since the first 20 minutes. To me, the NASDAQ is just very tired here. And again, you're seeing the banks and obviously, like we said, some other sectors. Energy's up decently here. So get XLV getting a bid here. See a lot of consumer names. 3M getting a pop. That's up 9%. We talked about that in the live stream yesterday, and I said I like this level yesterday on 3M. Take a look at the level there. Beautiful. That could even be a long-term hold. Amazing. Very oversold there. But in any case, you're seeing kind of some of these other names take the mantle. Right now, obviously XLF, but we're still into a pretty heavy level here. So again, the Qs, and by the way, again, the markets have defied gravity, they defied everything, but just for what it's worth, you're under the 618 and you got a hanging man on the weekly. So that, could be a little bit of distribution there. We'll see if that plays out next week. Again, I've been saying this for the last couple of weeks. I think once that debt ceiling is inked, it's going to be kind of a sell the news. Doesn't mean you won't get a gap up on it, but we're just way overdone here. I mean, on really everything except the Russell and the Dow. But these AI stocks, the semiconductors were red today in an up tape. They look tired to me. That's really what it looks like. So I think if you're bullish, if anything, you still want to pull back here regardless, because this is how you get a move of extreme reflexivity, right? So you want a healthy move up, not the semis up 20% in 3 sessions. You want the spiders, I would say, are a little bit more healthy here, but still pretty overbought. You want that kind of pullback in order to kind of digest those gains, because when you go vertical, you don't create supports, and then you get the VIX. You get the shorts out of the market, it opens a window, of volatility, and with liquidity coming out of the market, that kind of invisible buy the dip isn't there anymore. So anyways, those are the levels we're watching. So Q's still defying gravity. Again, watch that 618 on the SPY. We're basically there. We can get there Monday on a gap up, and then of course that double top point of control there at the 430 handle. So lots of levels are coming into Russell 2000. That's getting a nice bid here today, but again, the weekly still it's just, it's a one-day pop really, and it's got a good weekly close, but still a weekly inside bar inside of a big monthly inside bar. So it's a one-day rally. If it continues, that's really how this bull market move can continue, is if you get the Dow and the Russell and the breadth to kind of improve. Breadth has improved here today, but it's just one day and it's been trending down since February. So again, we'll keep an eye on it moving forward. Russell still going into this red bar though, so lots of resistance there. Dow here via the DIA, nice gap and go. So again, we talked about like a lot of kind of consumer names. The 3Ms of the world are up nicely today. And there's the market closing, by the way. So spiders closing just off the highs of the day. We'll get back to that at the end. But nice move there for the Dow. We'll see if this can get up to 340. There's resistance there. And then again, of course, that 343, we never quite got there. We talked about that for a while. We'll see if it can get there. Good volume there for the DIA. So nice pop. And we'll watch that 340 handle going into next week. All right. Semis, we mentioned already, down 0.25%. Still look really top heavy, going into a pretty good supply zone. And they are pulling back here. Again, just a big shot to the upside. And again, didn't build support, so just be careful here with the SMH if you own them, trail your stop. IGV having a nice day here today. And that got a weekly close above the 100 MA, but you did leave a hanging man there, and you're still going into a lot of supply. So again, I just see a lot of extension on a lot of these moves. They continue to defy gravity. So right now you can't really fight them, but just know that it's, we're kind of in a dangerous environment. So just keep it that way. And I know everybody's, posting all their gains and everything, but this is when you see the VIX just completely bottom out like this in front of a volatility event, it definitely gets me kind of interested. Anyways, Dow Transport's a nice pop. So we got through that wedge up 2% on the day. Nothing wrong with that when you see that move. So we got a nice little possible wedge breakout there. We'll see if that can confirm it next week. But and here's my other concern, is this should have been doing this since February. If the transports were making new highs this whole time, I probably would not have been bearish at all. But this has been a leading indicator of the downside, needless to say, much like the inverted yield curves and this dollar strength and everything else we can say. But it's trying to play catch up here. But again, this should be leading. Right now, we'll respect it. I'll give it the upside to 14.4, maybe 14.5. There's a gap. There's that red bar there. So we'll watch the transports here. But, they did have a nice outside move. We'll respect it. Let's look at the Jets here. Yeah, Jets had a nice, that's basically like a 2-3 month high there for the Jets. I have a level around 19.15, so we'll see if that can get there. But yeah, transport's having a better day here and shaping up. All right, the 2-year here, let's get over to yields. So again, the 2-year, this is the kind of another divergence, right? So we talked about this yesterday. I said yields are just pulling back here. They can easily pop, and the 2-year here was up 15.4 basis points. So that's a pretty big move. And we held this area here. It's probably doing some backing and filling, but if this starts to head higher, that whole thing about the Fed pausing, the Fed's going to cut rates, but rates are going down, it's not going to happen. So you get towards that 5% handle, it's going to be a problem for the market. Market doesn't care right now, but just be aware of these things moving forward. So 5-year, same thing, nice move. There's the 10-year up back to the 3.7 handle. Again, we talked about that support. It got a bounce off of that. And then the 30-year here at 3.88, again, getting a bounce right there. So again, this is that big 4% level on the 30-year. That's kind of the big psychological level there. So again, we'll continue to watch that. All right, housing XHB had a big move here. So not getting to 68, not quite getting there. We'll see what this does next week, but that's holding up really well, and we'll respect it here. In the meantime, you reclaim that 20-day moving average here. Still going into a lot of resistance on the weekly, but it's held up well. And XHB, it's just been a powerhouse. Every time you think it's going to go down, it just somehow finds a bid here. Remember, these rate hikes, they operate on a lag, so it takes time for them to show up here in some of these on these balance sheets. But man, big move there, and ITB as well, up 3.76. Still not making new highs, but trend is up nicely, and it's holding up well. VNQ finally getting kind of an outside move here. And looks like we got just above this red bar high. So that's a good move for VNQ. So that is able to get back above this breakdown bar, and it's now kind of back into this consolidation range. So, near term, your resistance, again, is going to go back to 84. So that's where we couldn't break out before. So we'll see if it can get there again. But it did show a little bit of strength getting above that red bar high at 81.80. So in a little bit better shape here. Big picture, it's still very weak though. XLF, again, nice outside move, but again, on the weekly, this looks like a good one-day pop, but you go to the weekly and you're still just in a bearish inside bar here. If you can get above this red bar and close above that on the week, then maybe things can change. But right now, it's still just it's just a weak pattern here. Down move, sideways to up. KRE, despite the strength today, down move and kind of sideways to up here. You get a weekly close above 43, then maybe you can go up to the 20 moving average. But for right now, just not a great chart, not a great pattern. KBE, same thing. And broker dealers with a nice pop up to 453 today. So that probably does want to get to 457, 460. There's your 200, and then 460 I think is a pretty good pivot point there. So broker dealers getting a nice bid. All right, crude here. So that got a continued pop, but that went into the 20 MA. And if we kind of put I've been drawing these trend lines in every day, but if we draw this in one more time, notice right where it kind of stopped, right? So right there, we'll see. We'll just have to see what that does Monday, right? I know OPEC's talking about cutting production again, and it kind of got a bid in the second half of the day. I think that's, it was right around here. That headline came out. So it got a bid, but it wasn't anything crazy. Again, you get back above this again, then maybe you can get to 76 after all, but I wouldn't touch it right now. I just don't really see any reason to be in crude here. XLE, that got a nice bid. They just keep trying to save this trend line. I just think you've just hammered on it so many times here. And ultimately, if we clean up these lines, you could make a case you're just doing weekly bear flagging. So again, just watch that. But XLE, holding up, and it got a bid here today. XOP, same thing. Stalled out right beneath that 50 moving average around the 125 handle. So just in that vicinity. I'm not sure what it wants to do here, but again, this as well, you could make a case you're just bearish inside bar right now on the weekly. So just be aware of that. OIH, big move, another big move here for OIH, 5%. So that's negating the kind of that descending triangle. So nice pop for OIH. This is holding up really well. And it held that 250 handle, but we'll see how it reacts to 280 again. Remember, the 200 MA there. 280's been a pivot point. If we can get back above that, then we'll talk. But for right now, just a big bounce with good volume. So I'll give it that. So nice move there for the oil services ETF. And then nat gas getting amounts. We talked about this trend line, little pause day and a pivot. We'll see if that can get a reaction next week. Nothing really doing though outside of that. Dollar index, which we talked about a minute ago, or at least we talked about yields. This is holding up. So just a one-day pullback yesterday and then a nice surge, reclaiming the 104 handle. Didn't even get to the 20 MA. I'd like to see more consolidation here, and then this can push higher. Again, another thing that the market's just ignoring right now. Doesn't care about it. But I think you start breaking these resistance levels, maybe you get back above the 200 MA. Could put some pressure on the market here, or maybe the market just pays attention to it. But for right now, dollar index holding up well. Gold here also holding up well. Believe it or not, I know weekly or the daily had a weak session, but you're still above the 20 MA on the weekly. And I would prefer a close up above 2,000 or at 2,000 to close at the highs of the week. But it's still above that moving average, so I've got to respect it. Now, this can turn into more, right? This could be bearish consolidation on the daily, rejection of the 20 and 50 moving average. I don't like that. But until you take this low out on a weekly close, I'm still going to give it a little bit of an upside bias here. If you take that out, you have some psychological support at 1900 and then probably about 1860, 1875, right? So that was kind of your last breakout area. So that's what we'd look for there. And then, of course, the upsloping 200 MA right around 1850. So those are some levels there to watch on gold. But it did back off today. But again, the weekly is not broken yet. So just don't, crown anything on the bear side just yet. Silver, a little bit weaker, though. Down 1.15, 20 MA rejection. We said 24 would be resistance. This can still consolidate, though, and go to 24.50. So I don't want to crown it yet as a rejection. The weekly, you still held the 20-week moving average, even though you lost it last week. So it's holding up. I still think it needs to do more backing and filling, but for right now, a little bit of a back off there. If this consolidates, it can go to 24.50, though. Platinum here, inside day, nothing really doing there. And palladium, just a little bit of a pop there. Nothing crazy. I would like to see that pierce double bottom, but we'll see what that does next week. And then copper had a nice pop in the beginning of the day. And this is interesting, right? So here's your kind of jobs number. We went up ahead of the jobs number, then we popped on the jobs number, then we sold off. So almost like copper is just kind of calling BS on the recession is not going to happen narrative. Just the fact that it still ended green, but it backed off way off the highs, right? If we're not supposedly going into recession, this should be closing at the highs, and it didn't. So just a little bit of a tidbit there to watch. Well, we reclaimed 370 on a weekly close, so I'm neutral on it right now. I still think it probably wants to go down to 340 though, so just be aware of that. All right, over to Bitcoin here. So Bitcoin got a little bit of a recovery here. It didn't negate that green bar yesterday. We did test it, but we didn't negate it, and now you're getting a bit off of that. So we'll watch how this plays out here. Again, watch that trend line going into the weekend. If that gets tested and taken out, then this can go up and possibly make new highs, honestly. That's really all I see for it right now. On the weekly, it's still holding there, right? So you still got a nice inside candle. And there's nothing to say that it's broken until you lose that 20-week moving average. You lose a 20-week moving average, then it's probably cooked. So just be aware of that. But, it's hanging in there for now, so we'll respect it. All right, lastly, back over to the spiders here before we get on to the weekend. Again, next week, 618. 430 area, that's where we're watching. I think the NASDAQ looks really tired. So if this market rally is going to continue, you're going to need to see more of what we saw today. XLF, XLV, KRE, IWM, XLE, those other sectors here. I think XLP had a big day. Yeah, consumer staples, that had a nice pop up, 1.38%. So you're going to need to see more of that. And we're going to need to see more of this, right? The equal weight S&P continuing higher. Until then, I think this, kind of on pins and needles here, especially going into an illiquidity event where liquidity is going to get sucked out and the Fed's going to be doing QT at the same time, which has not been done since December because Yellen's been draining the TGA since then. And that's probably a big reason for this rally. Also, the BTFP program in March. We were probably set to crash, and they threw liquidity at it. So we'll see what we get here going into next week. Also, don't forget, obviously, a rate hike is fully baked into the cake for the FOMC. We're not quite there yet, but just something to keep in mind moving forward. Anyways, guys, going to wrap it up here. You guys have a great weekend. Come find me on carnivoretrades.com. I'll talk to you all next week.